This is the Capital Market on Channels Television. Hello and welcome to the program. I'm Edidiong Iwang. Now, although the market kicked off the week on a sluggish note, bargain hunting activities gained steam on the last two trading days as investors cherry-picked stocks following decent Q1 2021 corporate earnings releases. Now, the all-share index rose 1.36% week-on-week to close at 39,832.61 points. As a result, the year-to-date loss moderated to minus 1.1%. However, activity levels were weaker than the prior week as trading volumes and value declined by 13.3% and 75.1% week-on-week respectively. Bargain hunting in large cap stocks, Seplat, Boa Cement, Nigerian Breweries, Dangote Cement, and MTN Nigeria drove the weekly gain. Sectoral performance was broadly positive as the banking sector and consumer goods indices emerged the week's decliners. The insurance index led the gainers chart, followed by industrial goods and oil and gas. Now, in the unlisted securities markets, the NESD closed the week positive as the NSI rose 0.60% week-on-week to 789.89 points, while the market cap stood at 561.46 billion naira. Now, about 55 million units worth 1.46 billion naira were traded in 249 deals. And in the bond market, trading in the Treasury bond secondary market remained bearish as investors continue to anticipate higher yields for FGN bonds. And the average yield expanded by 28 basis points to 11.9%. Across the curve, average yields expanded at the short, mid, and long segment. Meanwhile, in the Treasury bill secondary market, sentiment remained bearish as average yields across all instruments expanded by 10 basis points to 6.6%. Now, across the market segment, sell-offs of almost instruments drove the bearish performance as market participants sold off in anticipation of renewed supply. Activity level was weak in the Nigerian Treasury bill secondary market as focus shifted towards the Nigerian Treasury bill's primary market auction in anticipation of higher yields. Now, away from those numbers, now on Thursday, the Central Bank of Nigeria announced the immediate removal of all directors of First Bank Limited and First Bank Holdings PLC and the appointment of new directors for the Tier 1 lender. Now, briefing journalists in Abuja, the CBN Governor, Mr. Godwin Emefiele, explained that the decision was aimed at preserving the stability of the bank and protecting minority shareholders and depositors owing to insider abuse, credit, and breakdown of corporate governance. Let's take a listen.
To us at the CBN, not only is it imperative to protect the minority shareholders that have no voice to air their views about what happens in this bank, also important is the protection of over 31 customers of this bank who see First Bank of Nigeria as a safe haven for their hard-earned savings. The bank maintained healthy operations up until 2016 financial year, when the CBN's target examination revealed that the bank was in grave financial condition with its capital adequacy ratio and non-performing loans ratio substantially breaching acceptable prudential standards. The problems at the bank were attributed to bad credit decisions, significant and non-performing insider loans, and poor corporate governance practices. The shareholders of the bank and the First Bank Nigeria Holding PLC also lacked the capacity to recapitalize the bank to minimum requirements. Indeed, these conclusions arose from various entreaties by the Central Bank of Nigeria to them to recapitalize this bank.
Mr. Emefiele was also explaining why the Apex Bank had to reinstate Dr. Shola Adetuton after he was removed as the managing director of First Bank Limited. Now, speaking to journalists, he also says that no query or complaint was made against Mr. Adetuton prior to his removal and the financial regulator is satisfied with his efforts in the bank. Now, let's take a listen to what the governor says.
Given our regulatory intervention and forbearance regime, we felt that if there was any misconduct on the part of Dr. Shola Adedunton, that he should have been queried, the central bank should have been informed, and the central bank should have been party to such an action to punish Dr. Adedunton. We were not informed of any misconduct, neither were we informed of any query. Indeed, the Central Bank of Nigeria has been satisfied working with Dr. Adedunton on a stabilization regime for First Bank since 2016. He had played his role to the best of our knowledge, the best that could be done of a professional banker.
Now, following the rejigging of its board by the Central Bank of Nigeria, First Bank says the holding company and the bank will cooperate with the new directive from the financial sector regulator, according to a statement signed by the company secretary. The Nigerian Exchange Limited, the Tier 1 lender, reassures investors that the operations of the bank and the holding company are not hampered by the recent development. The statement adds that customers and other stakeholders should be rest assured that the bank is committed to ensuring stability and there is no cause for panic amongst the banking public. The Apex Bank, in its intervention on Thursday, reinstated the bank's outside managing director, whose tenure had ended, will end later this year. Meanwhile, Honeywell Flour Mills has faulted claims by the central bank that it defaulted in its loan obligation with First Bank of Nigeria, stating that the company has adequate security to cover its loan exposure. A statement by the company's secretary, Mrs. Yewande Giwa, stresses that Flour Mills has a long-standing financial credit relationship with the bank and has not shown signs of distress. It adds that the terms of the loan with the bank have been fulfilled in line with industry standards and in accordance with agreed terms. The central bank governor, Mr. Emefiele, had accused the consumer goods company of not fulfilling its credit facility with the First Bank over the years. But still on company management news now, Airtel Africa announced the appointment of Mr. Olusegun Ogunsanya as its new Chief Executive Officer, replacing Ruganta Manvada, who is set to retire from the board of the telecommunications firm. The appointment of Mr. Ogunsanya was contained in a statement sent to the Nigerian Exchange Group. It added that the new CEO, who is presently the Chief Executive Officer of Airtel Nigeria, will join the board of Airtel Africa effective October the 1st, 2021. Mr. Ogunsanya, who has more than 25 years of business management experience in banking, consumer goods and telecoms, joined Airtel Africa in 2012 as the Managing Director and the CEO of Nigeria, and has been responsible for the overall management of its operations in Nigeria. Away from company news now, the high debt service to revenue ratio is a major concern for the Debt Management Office owing to the impact of the COVID-19 pandemic on Nigeria's public debt profile, fueled by increased borrowing and dwindling revenues. According to the Director General of the DMO, Patient Oniha, there is a need for state governments to domesticate debt laws to enhance implementation of the World Bank-assisted States Fiscal Transparency Program. Let's take a listen.
The first budget that was approved last year, the Appropriation Act, the total borrowing it had was about 1.6 trillion. So when COVID happened, what happened? Two things. You know what affects the federal affects the states as well. Two things. Your revenues, yes. And we all saw what happened. There were tankers of oil in the high seas with no buyers. Countries were offering discounts because refineries were shut, businesses were shut, countries were on lockdown. So a new budget had to be drawn up. And that budget has a borrowing of about over 4 trillion. Let me put it that way. Yes, 4.2, you're right, 4.198. Why? That was because of COVID. That same last year, we quickly had to rework the books. Not only because revenues dropped, but now you now suddenly realize you needed hospitals, you needed all kinds of facilities, you needed palliatives because of the lockdown, people were shut down. So your expenditure increased while your revenues dropped. Could we have said, no, we won't do anything? You had to do something, and without the revenues, it meant you had to borrow. So COVID caused economic slowdown, certainly lower revenues, and it is the duty of government to revive and ensure that the economies are sustained. The absolute size of Nigeria's borrowing, when you compare it to the gross domestic product, is not high, meaning debt to GDP ratio is not high. What is high is debt service to revenue ratio, and that concerns us. So if your total borrowing is small relative to your GDP, other countries have 80, over 100%, ours is less than 22%. But in those countries, debt service to revenue is 10% or 15%, because the countries have revenues from taxes and duties that people pay. Are you with me? So here we don't have that revenue. That's why debt service to revenue is high. So what is our worry? That debt service to revenue is high, not the absolute size of the debt stock.
Now, considering the economic and financial atmosphere in the country, with inflation on the rise, unemployment soaring, and more recently, rising insecurity, what is the hope for investors? Well, on Capital Market tonight, we'll be talking about investing in a world of uncertainties and also get a review of the market. I'm being joined by Oluwatosin Ayonfalo, the Senior Manager for Securities Dealing at ZCap Partners. Good evening, Tosin. Thank you for joining us on the program. So let's just begin with investing in uncertain times. Like, what's it like for investors and also for market players?
2021 has been a very interesting year in terms of the financial markets and opportunities available to investors globally. And Nigeria has been in no way separated from that. We've had a lot of what I would call instability in terms of the actual policy making, and from the federal government, from the fiscal side, from the Ministry of Finance, and a lot of questions coming about Nigeria's ability to fund its budget and make good with its plans for the year. At the beginning of the year, we had conversations around the government borrowing from CBN to fund its last year's budget. The Ministry of Finance, I believe, said they were making plans to securitize that amount by end of Q1. We haven't heard anything about that. So those are the kind of things that are a bit worried for investors when they look at the country and then look at what is the direction of things. It's maybe a bit unclear, and it's very hard for an investor to make a decision to come into a country when he's not really clear about the direction of where things are. We've seen a bit of heating up come about with the security challenges in the country. And we know that probably would take the federal government's attention, even maybe to a higher level, as we've seen a lot of attacks and things ramp up in recent times, and probably they want to address it. And so we just think that it's a bit of a tumultuous time, and as such, what investors are looking for is direction on where the government wants to go in terms of dealing with these issues, in terms of its fiscal plan, in terms of its borrowing plan, and things like that. And so once those things are clear, you then be able to see investors be more confident to take on investment decisions in Nigeria.
All right, so we just want you to hold your thoughts there, and we'll take a quick break, and Capital Market continues when we return. Please stay with us. Welcome back, and thanks for staying with us on the program. I still have Oluwatosin Ayonfalo, the Senior Manager for Securities Dealing at ZCap Partners, in the studio with me. So just before we went on that break, we're talking about investing in uncertain times. Now, how do you financial consultants protect investments for investors in times like this?
Thank you for that. What we do as financial market operators, consultants, investment managers, and other people that play in the space is to take a whole view of the indicators and things that should be or may be worrying investors, and try to dissect from the noise and allow them and advise them to make the best of decisions. I think what we saw a bit of last year was a bit of extra risk taking from the Nigerian investor. I'll just say typical Nigerian investor, without really understanding what it is, the amount of risk they're taking. And as such, you see a lot of people going into investments that either went bad for some reason or the other, because they didn't grasp everything that was that they needed to understand before going into such markets. What advice I'd give people, especially in this year, is to ask more questions and trust those who are experts in this field. For example, what we do at our sister company is an investment management firm, Zinvest. We're registered and regulated by the SEC, and as such, those are the kind of firms that you'd want to entrust to give you the best direction on where to put your investments in times that are a bit uncertain, and there's a lot of volatility in terms of pricing in the market.
So what's the role of government and regulators in terms of investment and managing investment in uncertain times?
I think what's most important is for the government and the regulators to speak in one voice in terms of what they want to, what they plan to do and what they want to achieve. And so when there's a bit of clarity around their plans for the year and how they want to execute it, then it then gives the investors a bit of confidence, and they can then plan their investment decisions accordingly. The Debt Management Office has done a very great job in being transparent with its borrowing plans for the year, and as such, investors 2020 had I would say a very funny year for yields. Rates went as low as they've ever been in a long time, and that was due in part to what CBN did in 2019 when it froze out investors from the OMO markets, and we had all those excess liquidity flowing in the system. But 2021, that liquidity is gone, it's all settled, and as such, we are seeing what we've seen so far this year is yields go back up, and the markets begin to price itself appropriately in an environment where inflation is on the rise, GDP is low, there's pressure on the exchange rate, there's uncertainty. It doesn't make sense to say you expect Nigeria to be borrowing at single-digit rates. So once investors are clear that this is the trajectory for yields in this year, what they do or what they should be doing is to make decisions to be staying short duration. So say at maybe between 30 to 60-day investment tenors, while the rates stabilize, and then they can now take on longer investments. And so once we have that synergy between the governments, the fiscal authorities, the monetary policy, and everyone is speaking from the same book, then you'd have that confidence from investors that this is where Nigeria is going, and therefore this is what I should do with my funds.
Okay, still on regulators. Now let's get your reaction to the latest decision by the CBN to dissolve the board of FBN Holdings over the removal of its MD. How would you react to that?
I think it's still a developing story, and as such, I wouldn't want to make any assertions without the full picture. But I think what the central bank was doing is stepping in to address a bit of corporate governance or lack of corporate governance in some of the transactions that were going on there. And as such, they took on that move to change the board of both the holding company and the local bank. The changes to the board were across board, but if you check and see, it's really still around the same interests. Holding interests are still represented on the board, so it's not really that much of a drastic move in terms of changing the direction of where the bank wants to go. So I don't see it having that much of a long-term negative impact on First Bank and their books. It's just to give a bit of confidence to the investing public that it doesn't matter, the size of the company or whatever is going on. If there are things that they see that are not going on right, they are willing to step in, and make changes where necessary.
I mean, it's funny you would say it's giving confidence to investors. I was going to ask, what message does that send? Because we've already seen investors sell off on that stock, right? From Wednesday, Thursday, and Friday, we saw huge sell-offs on FBN Holdings. So what message does that actually send to investors? And what message does it send, apart from the bank itself, about the banking sector generally?
I think the main thing the CBN is trying to do with that move is to ensure that, corporate governance is key, right, in terms of all the policies that are enacted by players in the market, and to make sure that there's, fair use of funds by banks, when it comes to investing in the real economy. And I think this move is a bit drastic. But I'm not a policymaker, so probably don't know how they come about these decisions. But it was swift, and as such, there will be a bit of volatility on the stock in the short term. But when investors see that the overall direction of the bank hasn't changed, the plans the bank had in place will still be in motion, and things that they had confidence in about 2 weeks ago are still in place, then you might see a bit of stability in the pricing of that stock.
Okay, so let's move to the markets now. What's your review of the equity and fixed income market in the month of April?
It's been volatile, to say the least, and that's partly because the direction for yields in the fixed income market has been steadily going upwards. Like I said earlier, this is in line with expectations for the year. And as such, yields have touched 14%. Yields touched 14% on bonds last year. Last time we saw that was maybe October 2019. So it's been a long time we've actually been at these levels. And so it was a bit of, the volatility was a bit from the uncertainty as to where will these yields top. And it got to 13.5. Is this the maximum? Can it get to 14? It got to 14. Is this the maximum? It crossed 14 by the end of the week. So we're beginning to hear conversations about will it settle at 14.5. We've had a lot of investors say, because of the expectation for yields to rise this year, they've held back on their investing decisions, and as such, you've seen it draw down in secondary market volumes, as those guys have now decided to wait to go to the primary markets, where you see upturn of the stop rates month on month. And so at every point, maybe when it crosses the threshold like 14.5, we expect to see a bit of support, buying support to stabilize yields for those levels, and then we now begin to look at it. My expectation really is that we still have some things that are yet to be priced in, both in the equities and the fixed income markets. Nigeria had a tumult. We're just coming out of a recession. We had a tumultuous battle with COVID and the effect on the productivity of the country. And I don't think those things are priced in yet, right? Pre-COVID, we were at these yield levels, and now since then, inflation has skyrocketed. There's threats to our GDP performance for the year. There's been a lot of pressure on the FX, even though the central bank is trying as much as possible to stabilize it. You see all these. The federal government is trying to raise funds from different sources, trying to do deals with maybe IMF and all of that, and they always mention the fact that the multiple FX rates is something that they need to address before they'll disburse such funds. So you have the central bank with the Ministry of Finance, with the federal government, trying to find the best way to solve its immediate problem, when that but it could come at a cost in the long term. We saw a memo from the NNPC about fuel subsidy. I mean, they won't call it fuel subsidy, but fuel subsidy costing about 111 billion naira, and as such, they're going to take it out from FAC allocations for April and May. So we don't even expect any FAC allocation in this month, and that's going to tell on states that depend on FAC. And by the time FAC comes and they don't get their funds, they're going to raise noise in the media. The CBN and Ministry of Finance is probably going to have to dip into our savings, maybe excess crude oil savings, or increase its borrowing. The Ministry of Finance is confident that we have a good debt to GDP ratio, which is about 35% or so.
But the DMO is concerned.
But the thing is, when they keep quoting that figure, they forget to quote the revenue to GDP. Nigeria is not making any money in terms of internally generated revenue when it comes to tax. I think we're the 9th lowest, as of 2020, the 9th lowest with 3.6% revenue to GDP. That means even if you think we have more space to keep borrowing, we're not going to have as much money to pay down on those loans and to service those loans as they are and then pay down when it comes. So all those things might not affect us immediately, but they will have a long-term, a long-run effect. And as such, these are things that they should consider when they're making decisions on how to stabilize the economy and the environment.
All right, Tosin, I'm afraid we've run out of time. We have so much to talk about, but thank you so much for coming on the show today. Oluwatosin Ayonfolu is the Senior Manager for Securities Dealing at ZCap Partners. Well, that's it from me on the Capital Market Programs on Channels Television. Thank you so much for watching. I'm Edidiong Iwang.